Welcome back. And today the headline will be 73% of US mortgage borrowers currently have an interest rate below 5%. Talk about lock-in effect. That's one of the main reasons we're having such a historic lack of supply of inventory, because all those people that refinance, that bought a home back in during the onset of the pandemic, they lock in at a very low rate. So as a result, they are not going anywhere. They are going to keep their mortgage pretty much forever. That's what we're seeing. Fundamentally, supply and demand problem. The demand is always there, even under current interest rate environment. How can you unleash housing supply when there are so many mortgage borrowers have this lock-in effect? All right, so let's go over this article as provided by Resi Club. Okay, so as mortgage rates remain quote unquote higher for longer, that share continues to shrink. Most new borrowers are now predominantly taking out loans raised with a 6% handle or 6 or 7% handle. So what it means is that most borrowers that in the past 24 months, in 2023 and 2024, they have to subject themselves to the higher mortgage rate for those who qualify. So that's how it is when you refinance back in 2021 and at the beginning of 2022, you were able to take advantage of the historic low mortgage rate. So anyway, so let's go over this once again. Look at this. 21% of the outstanding mortgages have a 30-year fixed rate mortgage of 3%. That is absolutely mind-boggling. So needless to say, most of those people, they are sitting pretty for a long time to come. They're not going to go anywhere. Okay. They are locked in for life. Most of them. Okay. At 3%. Then you have almost 30% of the outstanding mortgages have a mortgage rate between 3 to 3.99%. Look, I think what this article failed to mention, of all the 150 people who own a home, do you know 40% of those homeowners, they do not even have a mortgage? Now you know what is the total equity of people who own a home today. It is a all-time high. I believe it's 13 trillion with a T. So when the people own a house long-term, especially long-term, that's most of their wealth or in the houses, right? That's how it is. If you own a home and you keep it long-term, you're going to be much better off versus someone who does not own a home and keep the home long-term. That's what I'm talking about. All right. Make sense? All right. So 40% of the homeowners that they don't even have a mortgage. So let's move on. 21% have an interest rate of less than 3%. 34% have mortgage rate of less than 4%. We're talking 50, what? Almost more than 50% of people have mortgage rate less than 4%. Then the next category, people between 4 and 4.99% mortgage rate, 18.1% of the mortgage holder are in this category. Then mortgage rate of 5 to 5.99%, 9.5% of the mortgage holders have this rate. And finally, 17.2% of the mortgage holders have an interest rate of 6%. So these people, 6% or higher, 6 to 7% higher, or those people that took out mortgages within the last 24 months during the elevated mortgage rate environment that we've been subjecting to in 2023 and 2024. And 2025, just to give you some heads up, the projection is the mortgage rate is going to be in the low 6% to high 6%. That's according to many resources out there. Okay. As you can see, based on this graph, just validate what I just said. All right. And then, so let's flip the data. Among outstanding mortgage borrowers, here's the share with a mortgage rate of at least a 6%. Okay. Okay. The people, let's look at over here. 70% of people this past year, 2024, have a mortgage rate above 6%. If you go back to previously, if you go back before the pandemic, like 2019, okay, you have 2019, 11.5% of people have a mortgage rate higher than 6%, 2018, 13, 2017, 15. So year by year, 10 years ago, 12 years ago, 29% of the mortgage holders have a mortgage rate of 6%. So it decreases slightly year over year from 2013 all the way to 2019. Then when the pandemic occurred back in 2020, when the mortgage rate came down to a historical rate, 3 to 4%, whatever. As you can see, a lot of people, they refinance. A lot of people bought homes for a low rate. So you see during the pandemic, 2020 to 2022, we have drastic decrease of number of people that have above 6%, 9.9, 8.1, 7.5. Then of course, the mortgage rate went all the way back up in the latter part of 2022, and then 2023, and then 2024. Then the percentage has double-digit percentage because people who bought homes in the past 24 months, they have to subject themselves to a 6.5 to 7.5% mortgage rate. So it is what it is. All right, borrowers take out mortgages with rates in the 6 to 7% in the last 24 months. The mortgage industry may see opportunities for refi boomlets. I like this term, refi boomlets. So what does that mean, refi boomlets? A notable example occurred in September 2024, a few months ago, right? As we're speaking in January 2025 right now, when the average 30-year fixed rate mortgage briefly dropped to 6.11%. Remember that? And I thought a few months ago in September, when the rate dropped to 6.11%, I'm thinking maybe it'll come down below 6%. That'll create a surge in activity, but it never went down beyond. This is just a teaser. 6.11% was a teaser, but during that short period in September 2024, it prompted some borrowers with recent high rate loans to refinance and secure payment relief. That's why that short period of time, September 2024, this occurred, refi boomlet. So as you can see, back in 2020, this is a chart from 2000 to 2024. In 24-year period, we have seen some volatility in the mortgage refinance index, right? Prior to the pandemic, there were not that many refinance until the pandemic, and you will see the amazing people take advantage of the low rate. You see the upsurge in the mortgage refinance index in 2020 and 2021 and part of 2022. Then the mortgage rate increased drastically in the second half of 2022, all the way to up to 8%. Remember, like November 2022, when the mortgage rate went all the way up to 8% for a short while, and then came down to like 6.5 to 7% in the last 18 months. Even 24 months, as you can see, the refinance index was very low in the past 24 months, as you can see, right? All right, so today we received the first 30-year fixed rate mortgage reading of 2025, which came in at around 7%, 7.11%. So here are the first readings of the year over the past decade. All I do, compare decade to decade around January, year over year, you can see the mortgage rate accordingly. Prior to the pandemic, you will see the mortgage rate at around as low as 3.8% in 2015, then 2016, 4%, 4.18, 2017, then up to 4.55, the average mortgage rate, 30-year fixed rate mortgage before the pandemic. Then when the onset of the pandemic, then the rate came down to a one-time historic event low. Then you have the mortgage rate in 2020, 3.74, 2021, 2.76. Oh my gosh, this is best time. 2021 is an amazing one-time historical event. If you took action if you bought a home during 2021, or if you refinance your existing home, you are sitting pretty, right? Your mortgage is an asset. Your mortgage is a wealth builder, right? So anyway, so 2022, the latter part, the interest rate went back up again, as you can see. Then the average mortgage rate was 3.29, and it shot up to all the way double. It doubled the mortgage rate in 2023 when the rate went up to like 7 to 7.5 to 8% in 2023, around 16, 18 months ago, to 6.45. Then last year, average rate 2024, 6.72. And then this year, this coming beginning of January 2025, as we speak, 7.07. Who knows, right? No one have a crystal ball, but a lot of companies, a lot of experts predict that the mortgage rate going to be between 6 and 7% for 2025 and 2026. Who knows, right? Maybe the high fives. Time will tell. All right. So the average model expects the 30-year fixed rate mortgage to finish 2025 at 6.34%. So again, my takeaway is, yes, we have still elevated mortgage rate. We have housing prices are very high. The affordability, housing affordability is at an all-time low. A lot of people cannot afford to buy a home, especially first-time home buyers. So what are your thoughts on this particular video? Do you have any kind of prediction as to what do you think the housing crash, or you think we go through a slight correction? Share your comments. Again, my thought is that the supply demand equation is still very positive. We are at around like 4 to 5 months supply of inventory, so we're still at a slightly seller's market. This means the demand is still greater than supply of inventory. So we're still seeing some challenges. And of course, there are some areas in the country, in the South and Southeast, they have more inventory than others. But yeah, we've gone through some challenges, especially in the past few years. So share your thoughts. And also, if you receive any value whatsoever from this video, please like, subscribe, and comment on my video. I'm trying to grow my channel. And finally, put your email at the bottom on the website below, so once you sign up for my newsletter inside my website, that you will become a free member of our real estate investment community. So you will receive a lot of free contents, free information about real estate investment opportunities in the various housing markets in the country. So you can become an educated real estate investor. All right. And other than that, I provide weekly housing market updates for the general public out there, all aspects of the housing market, and also investment opportunities for the investment market as well. Thank you so much for watching and listening. I'll see you on the next video. Have a nice day. Bye-bye.